time to do Friday business right here on Business Morning and Channels Television. 55 minutes of current and relevant business talks. That's what we're going to do. So you need to buckle up and get ready as we start this ride. I'm Ini John Mekwa. We start off with the global oil space. Oil benchmarks were headed for a 7th straight weekly decline on worries over a global supply surplus and weak Chinese demand, although prices recovered on ground on Friday. Now let's look at the numbers right here. Brent is at $75.74 a barrel, and that's up 1.7%. But it's not up to what we have been seeing. That's why the benchmarks are closing on a weekly low. WTI, $70 regained a bit, as we see there, because we know, I think yesterday it was about $69, so $70.45 a barrel. That's up 1.6%. Both benchmarks slid to their lowest since late June in previous session, a sign that many traders believe that the market is oversupplied. Brent and WTI crude futures were on track to fall 4.5% and 4.8% for the week, respectively. That's the biggest losses in 5 weeks. There are concerns about China's economy and demand. We discussed that on Business Morning yesterday. Surging U.S. oil output have also fueled the market's downturn this week. Brent and WTI also in contogo, a market structure in which front-month prices trade at a discount price to further out. Saudi Arabia and Russia, those are the two world's biggest oil exporters, have called to all other OPEC Plus members to join an agreement on output cuts for the good of global economy, only days after a fractious meeting of the producers. But it's also important to note that while the giants are talking about voluntary cuts, demand is still low, which is why price is still at the low levels as at now. We go to the global grains market now, and we can tell you that Chicago wheat futures fell on Friday, but the market was still on track to end the week up more than 6%, its biggest weekly gain since June, after the largest U.S. sales to China in years caused a flurry of covering. There you have wheat is down, however, 0.5%. Marginal we see there at $6.39 for a quarter of a bushel. We have soybeans also, that was flat, headed for a 5th consecutive weekly loss as rains in South America boosted the supply outlook. Corn we have, I wonder if we can have the number there. You have there, this is corn, this is soybeans and changed at $13.11 for half of a bushel. Corn also, it eked out a small weekly gain. There you have it there. That's soybeans. We should have corn by now. Then the most active wheat contract on the Chicago Board of Trade was down 0.5%, $6.39 for a quarter of a bushel, and that's up 0.1%. Prices reached $6.50 on Wednesday, and that's the highest since August. A lot happening right there. That's in the grain space, because rains in Brazil and Argentina, who are both key exporters of soybeans and corn, have helped crops after dry and hot weather that hit yields. Also in the United States, which is another big producer, farmers are likely to plant more soybeans in 2024, and many plan to cut back on corn acre with future prices. There are also reports of another attack, unfortunately, on ports infrastructure in Ukraine. And we know Ukraine obviously is a major grains producer. They've been bombed by Russia, and that's not the first, neither is it the second. Romania's transport minister said the country plans to boost monthly transit capacity for Ukrainian grain through its Black Sea port. That might help Ukraine, but I mean, when we have their infrastructure, their port infrastructure being bombed, or their storage infrastructure being bombed, it doesn't help in any way. Let's come back to Nigeria now. Nigeria's Purchasing Managers Index, the PMI, has dropped again, and it's been below 50-point threshold for the 2nd consecutive time since March this year. According to the latest report from CSL Securities, the PMI reading fell to 48 last month from 49.1 reported in October, as both outputs and new orders declined within the period under review. The PMI, which is an economic indicator to gauge economic health of manufacturing and services sectors, also indicates a contraction in Nigeria's private sector in the month of November. Meanwhile, Nigeria economists say that business confidence in the country has declined in recent months, and that's due to challenging economic environment, largely caused by the depreciation of Naira and high energy. Of course, that's no news. We see companies leaving the country. Obviously, that's one of the results of it. Now, there's a story that's been going on since yesterday. We brought it to you. Seems to be a lot of confusion around this. And that's about the circular that was released by the Nigeria Interbank Settlement System, that's NIBS. They had asked banks to delist payment solution service providers, that's PSSPS, switches and super agents from its outward payment or transfer list. This implies that while switches, PSSPS and SAS may process outward transfers as inflows to banks, they are not to receive inflows. So I think the active words there are inflows and outflows, as their licenses do not permit them to hold customers' funds. To operate in Nigeria's payments ecosystem, operators must get at least one of the following licenses from the CBN. That's switching and processing, mobile money operations, payment solution services, and regulatory sandbox to operate. So please, I think this comes to a personal responsibility for you to know where you can keep your money. So those platforms, names have been thrown around. We've seen reactions also, but you really need to check the CBN website for the qualified organizations or companies that you can keep your money. They are not supposed to be holding money, even though they can transfer from them. But, you know, receiving is what NIBS is talking about. We're trying to get NIBS to come and explain this in plain language to Nigerians because there's a lot of confusion out there. We've seen everybody interpreting this circular in different ways. So it would be really nice if we had NIBS. And I'm calling on them again this morning after talking to them privately. NIBS, we would really appreciate if you can come on air and talk about this, the implication and exactly how it works, because there are different interpretations from different individuals and especially the organizations that are concerned. This is people's money, and I'm sure you want to help them protect it. So please, NIBS, we're inviting you to Business Morning to come on air and explain the implication of this circular. But so far, I mean, you have to be careful as an individual talking to our viewers now. Check the CBN website for some of those lists. It's really a rather long list. Some of them have one license and some have the other, so you know which of the organizations or companies you can use when it comes to your money. Well, still talking about money, former Central Bank of Nigeria Governor Mohammed Sanusi II is calling for a proper audit of the Nigerian National Petroleum Company Limited, that's the NNPCL. The 14th Emir of Kano, who noted his call for the probe of the organization when it was the NNPC cost him his job at the CBN, also cautioned against the president doubling as the petroleum minister.
Let me advise that this idea of the president being petroleum minister is not a good idea. The last president was Minister of Petroleum for 8 years. When I was governor of Central Bank, we had a petroleum minister. So when I talked about NNPC, I could attack Dizani. Now nobody can talk about petroleum because 8 years, if you talk, you're attacking the president. We need that buffer. Somebody has to be there. So a minister has to be there who is held accountable by Nigerians. Why is NNPC not able to bring in dollars? I'm sorry, this is the question that cost me my job. I will continue asking this question until NNPC is fixed or until I die. Where are the dollars? We need to shine light on NNPC. The finance minister cannot tell you that today, this is how many barrels of oil that we produce and exported. You can only rely on NNPC telling him. Those barrels are revenue. They belong to finance. We've been talking about this for 10 years. We are no longer paying subsidy. So where are the dollars? Before it was under recovery. Now we don't have under recovery. Where is the money? NNPC is the most opaque oil company in the world. When I was in the central bank for 15 years, they had not been audited. So, the central bank is easy to attack, but the central bank does not manufacture dollars. And you want to have stability in the exchange rate, you've got to go back to those issues we raised in 2014. You need to follow the money. And I'm glad the CME is here. This is the #1 priority.
Well, trust Alaji, or the Emir right there, always coming out right there. I mean, his speeches always have things that you have to follow up afterwards. But I mean, it's one of the things that we've also had here in the past, I think 3 administrations or so. We've had the president as the minister of petroleum, and by now we should have learned lessons from that. So we'll see what's going on with President Bola Tinubu. Now let's move to another issue right here in Lagos State. We've had issues of demolition and what it's cost both investors and homeowners, employment, and all of that. And it seems Lagos State's government may have a solution, or they are proposing some form of solution. But first of all, let's take it up from there and see what this is costing even the state itself, the issue of demolition and housing Nigerians who reside in Lagos. We have joining us now Barakat Odunuga Bakari. She's a special advisor on housing in Lagos State. Thank you so much for joining us on the program.
Thank you for having me.
Yeah, so you have made a lot of people cry this period. Doesn't seem fair, and a lot of money has gone down the drain because some of those buildings, we know they cost hundreds of millions of naira, apart from people who have been left homeless, employees, the owners of houses, investors who have put money in, all of that, but some people have asked, couldn't it have been averted?
Well, thank you very much for asking that question. I'll start off by saying that if you have a proper title to a land, or you get proper documentations to a land, and you adhere to the instructions given by the state government, your homes or your properties will not be demolished. The Lagos State Physical Planning Ministry has stated rules and regulations that before you start a building, you have to get approvals, and at each interval, each milestone, you also have to get approvals as well before you proceed to the next level. And most of these recalcitrants or people that don't listen to what the government has stated are the ones that are being affected by this. The Lagos State government has no intentions of demolishing properties that have proper titles or have proper permits. So after those, then you have to get a certificate fit for habitation from the Lagos State Building Control, LABSCA. But if you ask these developers that have built, that have their buildings being demolished, most of them don't have proper titles to those lands, and they don't have those permits.
So that's why you are talking about real estate regulation,
yes,
in order to avoid this kind of outcome, sad outcome that we've seen in recent times in the state.
Yes. So the Ministry of Housing, under the Office of the Special Advisor to Mr. Governor, is coming up with a conference next week. It's the 4th real estate marketplace. It's the team is a panacea for disaster mitigation and recovery in the built sector. And it's targeted at everyone in the built sector, from PropTech startups to developers to estate agents to anyone literally in the built sector, to sensitize them on what to do to avert such disasters and their buildings being demolished. So it's coming up at the Eco Hotel Expo Center, 13th and 14th of December next week. It's a 2-day conference, and it would be a very rich.
Yeah, but personally, I've attended, of course, as a journalist, I've covered a whole lot of it. It seems when we go to events like this, either you have the elite there, so it doesn't really address the issue, which is to share information and to highlight an easy way to get things done, because you still have the bureaucracy of government, which encourages people to cut corners. You still have costs. these are the issues that the normal average Nigerian faces when they want to build a house. So when they struggle and get some money and are able to get a land, you know. So, I mean, when you have events like this, who is coming? You get the high and mighty. You get the journalists also to broadcast. How do you get the information to those who really need it?
There's publications that have been out for like about 2 weeks now, advising and calling on targeted audience specifically. As at today, we have about 3,100 registrations already for people that are attending. The conference is free, but registration is compulsory, and it's targeted at anybody in the build sector, from the real estate agents to the developers, so not just the elites alone. So it's targeted at everybody that is in the build sector. And I can tell you that it's going to be different because the topics we have for this year's marketplace. So some of those topics are disaster mitigation strategies, best strategies for mitigating disaster in the real estate and build industry. There's also the role of public-private partnerships in enhancing disaster mitigation and resilience in the built industry. There's insurance and risk management as a mitigant and recovery tool. There's also using data obtained from regulation to avoid disaster.
I believe the conversations will be held in the language everybody can flow with.
Oh, yes, definitely.
Okay, but would there be an opportunity for input from them?
Yes, you can ask questions. You can ask questions.
But all of this does not solve the problem of cost, you know. It's still really expensive. Even when government build houses and they call it low-cost housing and all of that, the low earners can hardly reach it.
We have, that's not true, because we have houses ranging from about 3.5 million naira.
How many people can afford 3.5 million naira?
Well, you don't pay at once.
Okay.
You pay an upfront payment, and then you pay over the spread of about 10 years.
That's for mortgage.
Yes.
So you should have a mortgage.
We do have a mortgage, yes, that is managed by the Lagos State Mortgage Board. So you can either do that or you can buy outrightly for people that can afford the outright payments.
I know that when Mr. Fashola was the governor, when he started the Lagos Homes, he did put some structure in place. So it's only first-time homeowners that can access it, you know. So there's no abuse, because we know ourselves, you know, a big guy will go and
it's still the same.
So you still have those structures there.
It's still very much the same.
So we don't have people who have owned homes before getting the first.
No, we don't.
Okay, all right. Well, we hope not to see this. We do know that the state government obviously is trying to cleanse the landscape in Lagos State. That's why we have all of that. But I mean, sometimes when you listen to the stories, I've heard of people who have died, you know, from all of this demolition. So it would be good if we have talks and simplified processes that will make home ownership and home building, and get only the professionals who are well informed as developers, you know, into the sector, so it will ease, and then we'll have to see things like.
On that note, that's what the agency that I oversee does, the Lagos State Real Estate Regulatory Authority, LASRERA. So the agency was created for.
Yeah, we used to speak a whole lot with the former SA there, who is now in tourism.
Yes,
Commission of Tourism.
Yes, so the agency was basically created to cleanse and sensitize, regularize real estate practitioners in Lagos State. Because if you go out now, you see somebody outside, they have a plank in front of their house saying they're practicing real estate. So, and they charge ridiculous amounts for agent fees. So that's what the agency does. And also we've had complaints from people in the past as well too, complaining about developers having like maybe 10 units and selling to about 200 people. And the Lagos State government, through the agency and the partnership with the Ministry of Justice, has been able to recover quite a large sum of money, almost about 500 million naira.
Yeah, I was involved in one of those cases. I covered one of it, and then we brought it to the agency's attention, and they followed up and got to court and things like that. And I do know also that the agency was trying to compile a list of agents, you know, those who should be trusted. But at the time, a fee was also a discouraging factor for that.
Well, you can't practice real estate anywhere without paying a fee to get certified. Even in the UK and the US, it's done everywhere. And I can tell you that the fee that we're telling developers, agents, or realtors to pay in Lagos State is nothing compared to what they make. So you're making money in the state, you should be able to contribute back to the state government as well, for you to get licensed.
All right, okay, give and take. That's the name of the game. Thank you so much, Barakat Tudunga Bakare, Special Advisor on Housing in Lagos State. Thank you for your time and wish you the best.
Thank you very much.
In your outing.
So much. Thank you very much.
All right. Let's take a break. When we come back, we do have, a sad one this time. Those companies exiting the country and what they are taking away from the country and what is costing you and I. We'll discuss that after the break here on Business Morning. To stay with us. Welcome back. Still watching Business Morning right here on Channels Television. Procter & Gamble is the latest to announce its intention to leave Nigeria and end its operation. Ground operation, they say, is already short. And this is not the first. We've been feeling the pinch of some of these companies that have been leaving the country. We talked about it earlier when we started the show. Well, Dr. Lulu Ojo is the Chief Executive Officer of Merit Health Limited. He joins us in the studio. We know that the pharmaceutical industry has been one of the worst hit with all of this exiting of companies in the country. Dr. Ojo, thank you so much for your time. Good morning.
Thank you very much for having me.
Did you see this exit coming? Have we had it this bad before?
Yes, it has been there. We must face the reality of our situation. We've had many of these companies, multinational companies, restructuring their operation much before now. For instance, we have the likes of Hoffmann La Roche, one of the biggest pharmaceutical companies. We have Bayer, we have Pfizer, who have strategically reorganized, let's use that word, their business operation in Nigeria.
And you said they want to change their model. They change it to import-based model. But we know what it means. It means you're not manufacturing in Nigeria. Nigerians are not engaged.
Yes.
More FX is needed to bring those manufactured goods into the country.
Yes, that is why you see me using that word, choosing that word, because that is their language. You know, it's a strategic move, it's a model change, is this and that. But the truth of the matter, me and you know, is that it's no longer comfortable for them to do the manufacturing here. In actual fact, the Chief Financial Officer of Procter & Gamble used one word which I want us to note, that they are effectively dissolving their footprint on ground in Nigeria. That word was used, effectively dissolving their footprint on ground in Nigeria. And that is what it means. And if you look at a company as big as Procter & Gamble, you know, dissolving their footprint on ground, then you know that's a serious matter.
That means more importation. But they're also leaving Argentina. Do we have similar challenges?
These are business organizations, and they take decisions based on what they call bottom line. Exactly what is in need for them. So Nigeria and Argentina must have had a similar outlook in terms of what, but I don't know exactly the details of what happened in Argentina, but in Nigeria, we know.
Nigeria is FX, I guess.
Mostly. That is the immediate cause. There may be remote, but the immediate cause of this exit is FX.
But, this should be good news for local manufacturers like you. I'm talking of you're in the pharmaceutical sector.
Yes.
You know, so if we have these companies, multinational companies exiting, shouldn't we have local production step in?
Yes, we should. That is the expectation. But the reality on ground may not be there. Because even the local manufacturer, I must say this because every time I appear before you, you refer to me as a local manufacturer. And I take that. But I've worked in the manufacturing sector before, but now I'm not. But the truth of the matter is that most of the manufacturing that are done in Nigeria, the inputs are imported. That's the truth. We don't have the API, the active pharmaceutical ingredient. We don't have them being manufactured here. So we import them. The machinery, we import them. The even some of the excipients, if not all of the excipients, we import them. So it's totally importation based. So what we will have gained by saying the big guys, the multinational are leaving and the local manufacturers are supposed to take advantage, it's not there, because the local manufacturers themselves, they are faced with the problem of forex. They don't have the forex to be able to import their raw materials, to be able to import all the inputs that they are needed.
What stops us from producing the raw materials here?
It's exactly the same thing that we are saying. Myself, I was here before you last year, almost about the same time, and we are discussing the same thing, that if you want manufacturing to happen in your country, there must be a decided action towards that. Because you can't manufacture, I don't know, the president of Manufacturers Association of Nigeria said in 2022, manufacturers spent about 144 billion naira on alternative power source. So how do you cope with that? Things that are needed, the basic ingredients that are needed to get manufacturing smoothly operating in the country are not just there. And that is why you see that the sector is not having the kind of traction that it's supposed to have. And let's look at Procter & Gamble. Procter & Gamble had about $50 million from Nigeria in 2022 to a total revenue of about 83.6 billion globally. So if you look at the 50 million that Nigeria contributes to 83.6 billion, what is that? It's nothing to them. And now, even to make the $50 million now at the recent Naira dollar conversion rate, they may have to sell 4 times more to be able to get the $50 million. So that is why they said a dollar-denominated business like theirs cannot make value in Nigeria. And that is their exit. That's the purpose of their exit.
Very unfortunate. Now, so if it is difficult or seems like a long-term plan for us to have local manufacturing of these goods that are now going away with the manufacturers, do you think that the presidency, the federal government, for instance, could take some, I know you called it decisive steps, maybe to keep these companies for longer, to help the local manufacturing sector, you know, maybe boost a bit to be able to manufacture this before we can let them to go? Because I don't know, maybe I've missed it. I haven't heard any strong statements from the federal government when we talk about the issues of companies exiting the country.
Thank you. We come back to the basics, and the basics is that what does the government want? We said it here when we were talking, that it revolves around that man and the strategic intent, that intentional action to say this is what I want. Maybe the man in the saddle right now can say maybe the time is too short to start rating him, but they must hear us. They must hear us in the sense that if Nigeria wants manufacturing, then we must create the enabling environment. Look, I may not be able to go. Many other established pharmaceutical companies, for instance, the likes of Fitsen, the likes of Emzor, they have done so well and they are doing so much. This dollar thing is affecting them, but they cannot leave because this is their country. And what we need to do is to grow more Fitsen, grow more Emzor, and it has to be a direct action. To get credit in Nigeria, it's about 30%. So what will I do when I already pay 30% to the bank? So how do I make my own money? Now, to even be able to get the input that I need, if I have the Naira, there is no dollar. If I will get the dollar, I have to pay so much for it. So it's convoluted, so to say.
Yeah,
Now, we need to understand this. It's not rocket science. It's just about us. It's about our priorities. It's about us deciding that we want to make Nigeria good. And if we want to make Nigeria good, there are certain things we must do. There are certain things we must stop doing. When you read in the paper, one gentleman or one woman stealing 90 billion naira, stealing 80 billion naira, then start wondering what is wrong with us. We are where we are today. We are not here because it happened yesterday. It's been happening. The rain has been beating us. Not before now, but we don't seem to be looking at it.
Well, a lot of questions, Dr. Joe. I mean, because even the fact that the president, I think, just came back from a round trip asking for investors to come makes you ask, if the ones who are here are leaving, will those ones we are asking to come, will they, be able to come and stay? But thank you so much, Chief Executive Officer of Merit Health Limited, Dr. Oluwajo, for your time with us this morning.
Thank you very much. I appreciate it.
Well, talking about doing business in Nigeria now, the chairman of the Presidential Fiscal Policy and Tax Reforms Committee, Mr. Taiwo Oyedele, says that the current tax system in the country is unsustainable and it is a conduit to siphon the nation's revenue, which has led to the country to borrowing to finance its budget. He said this yesterday at the 2023 National Advertising Conference organized by the Advertising Regulatory Council of Nigeria, ARCON.
The third edition of the three-day National Advertising Conference, organized by the Advertising Regulatory Council of Nigeria, ARCON, is holding in Abuja with the theme, Marketing Communication as an Enabler of National Transformation. The guest speaker of the day and chairman of the Presidential Fiscal Policy and Tax Reforms Committee, Mr. Taiwo Oyedele, harps on what he considers a key issue hampering national transformation.
Tax harmonization. Why is it that we have over 60 different taxes and levies? Officially, unofficially, nobody knows the number, but we know it's more than 200. More than 200 different levies and taxes in Nigeria, one country. Yet, all the taxes we collect from these legal and illegal taxes is not even up to what South Africa collects from only one tax, personal income tax. Personal income tax alone last year, South Africa collected more than 26 trillion naira equivalent. All the taxes collected in Nigeria, local government 774, 36 states, FCT, custom, FRS, is not even up to 16 trillion.
He highlights some of the measures that could change the tax situation in Nigeria.
Of course, they are collecting the money. It's not going to the government. The more you allow that to continue, the more chaos you create, because you are feeding your monsters. There are people who have resources more than the local government. They don't mean well for the country. That's why they can buy anything and buy their way to the detriment of society. It's our responsibility to fix that. We must optimize revenue. Our target at the Presidential Committee is limit all these taxes to a single digit. All taxes, local government, state and federal combined, should not be more than a single digit. And we'll make that happen, and God will help us.
Representative of the Minister of Information and National Orientation, Mr. Larry Issa Onilu, who is the Director General of the National Orientation Agency, calls for the support of ARCON in the task of citizens' perception re-engineering.
We need your creative solutions and approaches. We need your unparalleled network. We need your platform. This is not about propaganda or noise making. No, instead, it is about enlightenment, sensitization, about opening the eyes of Nigerians to see the various economic opportunities emerging around them.
ARCON anticipates that these conversations will serve as a catalyst for substantial and enduring national transformation, transcending the traditional limits of talk shops and ultimately contributing to the sustained improvement and development of the nation. Dele Omoyeni, Channels Television News.
Well, talking about taxes now, one group of individuals who feel the brunt of taxes more are the entrepreneurs. They are the ones who feel it. We're discussing Faith Foundation reports on the state of entrepreneurship, and we have a report that shows that Nigeria's entrepreneur index was 0.52 out of 1.2, slightly above the average of 0.5, but lower than the previous year. And we have a whole lot of findings now. For instance, the nano, micro, and small businesses, 55% of them pay taxes, with most paying taxes and levies to state government agencies And unfortunately, a fraction of that does not get to the government, as Mr. Oyedele noted there. Well, this was also captured in this report. Well, to discuss this are two beautiful women. So, pardon me, it's a women's affair. This time around, Denike Adeyemi, she's the executive director of Faith Foundation. Also, Amaka is in green. Nwokolo, she's the director of the Faith Institute, Faith Institute, joining us this morning. Good to speak to you ladies this morning. Let's own this.
We are.
Let's own this. All right. So we saw PMI drop. It doesn't seem like a good time. The average is supposed to be 50, you know, but we've gone from 59 to 58 right now. So, and of course, the entrepreneurs make up a major part when you talk about private sector contribution to the economy, and your findings shows that we are not looking so good, right?
Yes. So what we do with our annual State of Entrepreneurship reports is to look at the pulse of entrepreneurship and how it impacts entrepreneurship and enterprise development across different segments, particularly nano, micro, small, and medium enterprises. And we do that on the basis of 5 indicators: business performance, skills acquisition, innovation technology, and as you said, perception of opportunities and business environment. And so when you talk about things like just even the macroeconomic environment and things around fiscal policy, monetary policy, you find that MSMEs, who contribute about 50% to the GDP of the economy, are the ones that feel the brunt across the different spaces. And from a year coming from a number of policies, we've talked about even just limited cash availability now. We started with that at the beginning of the year. Foreign exchange, so many things that have happened this year have significantly impacted the way a lot of our small and growing businesses are faring in the country.
Well, you know, when the election, obviously at the beginning of the year, we had a lot of uncertainty because investors weren't sure of how elections would turn out. And I think it's kind of normal, you know, you don't know which way to go. And then when we now had the election, I had President Bola Tinubu as the president. The market rejoiced, to the best of my knowledge. At least I followed the equities and saw that because he's perceived to be a pro-market individual, you know, that goodies that will be coming. Can we say, in his about 6 months in office, can we say that from your report, the entrepreneurs have also been rejoicing for following the perception that he's a pro-market? Adinke, please.
So I will talk about the index of perception of opportunities that we looked at. It still remains the highest indicator where Nigerians feel that there's still a lot of prime opportunity to grow and generate revenue and sustain yourself on the path of entrepreneurship, despite the challenge. But what we saw was that the perception of opportunities, even though it ranked the highest this year, had dropped from between last year and this year. So yes, it was the highest indicator in our state of entrepreneurship, but it was lower than what it was last year. Even with the new president coming in, you can't still take away the impact of even the election. During the election cycle, there's limited engagement, limited economic activities. Business tend to slow down, except you're doing a business that's directly related to the election process. You will be challenged. And that was also against the backdrop of all the things that had also happened at the point in time. But we need to make sure, and I think the message for the government is riding on that optimism that entrepreneurs and Nigerians still have, that we find that this land is a land of potential economic growth, and how do we make sure that there are policies that help to enhance the entrepreneurial potential of Nigerians.
So that anticipation is still on?
Oh, it is there. It is there.
All right. So let me come to Amaka now. Talk about, you said your report shows that in Nigeria, 55% of nano, micro, and small businesses surveyed noted that they pay taxes, with most paying taxes and levies to state governments and agencies. And you also noted somewhere some does not get to the government. I think that was supported by Mr. Oyedele. What harm does this bring? Because if I pay tax, which I do, I expect to get some benefits from it. And these businesses, they use infrastructure every day. So, I mean, if they don't get the benefits because either the funds do not get to the government or the government is not paying attention, especially the nano businesses, then tomorrow or next year, I'm discouraged from paying taxes. And so I find a shortcut.
Absolutely. When we think of the multi-taxation process or situation in Nigeria, it's really one that is dire. and needs urgent attention to try to sieve through what the issues are and streamline the multiple taxes that exist so that it's easier for businesses to comply. What we found with our report is that, and if people have the report, you can download it at www.faithfoundations.com/research. Once you download that report, on page 24 of the tax report, it literally lists an array of taxes that nano, micro, and small businesses are supposed to pay, and it's a lot. And so what the report and what we advocate for and recommend is that there needs to be some form of streamlining for that to happen. And when that happens, then it's easier for people to comply, and both parties benefit, right? The government is able to have that revenue rather come in, and then hopefully they can channel it so that we see impact within the space. One of the things we asked in the report was if businesses were willing to pay more taxes, and we were very specific with asking that question because sometimes people assume that businesses don't want to comply and that they're just trying to cut corners, but that's not the case. It's just that the process and the system is cumbersome and just not straightforward, very unclear. For example, people don't even know the number of taxes that they're supposed to pay. And so if I don't know what to pay and I have multiple people representing the government or coming in the name of the government to collect money from me, and I'm paying all these multiple people, at the end of the day, you run me out of business and then we both lose, right? And so back to the question around if people are willing to pay, we found that 73% of the businesses we surveyed indicated that they were interested in paying as long as there was accountability and the government was able to channel funds raised to specific areas like healthcare, like infrastructure, like education. And so on the whole, when we look at the system, look at the situation, the recommendation is, first off, let's identify what the taxes are, let's streamline them, let's create a process that's easy for people to comply. And in that way, you'll find that we're even able to expand the tax bracket, have more businesses come into the formal sector, government wins, MSMEs win.
It doesn't look like that's easy because we've been having this conversation for many, many years.
Yes.
The issue of multiple taxation and you know, bunching it up and making it kind of easy for businesses to know. I wonder why it seems so difficult. I remember some months ago, FIRS, they had come to Lagos and met with the traders because they were trying to, you know, reduce it. And they had, I mean, it was a clash of agencies and government, and that's why you've seen them pull back. You understand? So, I mean, is it, I don't know. I don't know how we can do it, seriously.
No, but I think...
Because we know what we ought to do, but it just doesn't seem like the will is there. The leakages are there, even inside the tax system, the tax collection system, the tax payment. I mean, there are leakages. There are some individuals who claim to come from the government, and you know, businesses are paying for these things.
Correct. I think that what's happening now signifies some hope, right? Because presently, and for the first time in a long time, we find that this government, you know, has actually set up a committee that's looking specifically at this issue, right? And they have that purview, including taxes for NMSMEs. And so that in a way signifies some hope. And what's also happening is they are also the committee, and thankfully we've also been able to, you know, contribute, provide some form of input on behalf of small businesses to say these are the issues. And what that committee is doing is carrying out thorough research to understand what's happening within the space, so that on the back of that they can prefer recommendations and begin to implement.
We need timeline. We need timeline.
Yes,
we don't have forever.
There have even been timelines, because if you reference Mr. Taiwo Oyedele, he was at our Policy Dialogue series 2 weeks ago, and one of the things that they've done was they've even done like an initial report on immediate things that they're going to do. And part of their proposals is creating a single revenue window that you can see all the taxes. And if they're able to get their work done, according to him, they will get to a point where there's there's a single digit number of taxes that, particularly for micro and small businesses, will be required to pay. There's transparency about what you're required to pay. There's also an understanding around that multi-layered level, particularly at the state and local levels, to say, how do we take away non-state actors? How do we digitize the process? to ensure there's transparency and ease. So, everybody knows where to point to and who to point to with that. And we have to encourage the engagement process. So yesterday they engaged MSMEs, and I agree with you. Yes, they've done this engagement again, but we cannot but support, and let's see. At least there's that presidential commitment now to seeing that, and they understand that it's a multi-layered issue that has to be addressed and taken into consideration.
And I'm sure Mr. Oyedele knows, he knows firsthand, at least we've had a lot of conversation with him, what impact this is having on businesses, on entrepreneurs, and generally the economy,
yes,
at the end of
because it has to be a win-win, like Amaka said. If we're able to expand the tax net and get more people to pay less taxes, you'll probably have more revenue. And at a time that we are in this country, we need that. So
we really need that. To borrow less, that would be good news. Thank you so much, ladies. Adenika Adeyemi, Executive Director of Faith Foundation, Amaka Nwokolo, Director of Faith Institute. Thank you so much.
Thank you, Amy.
For your time.
Thank you.
Let's take a breather. We'll be back with the market right here on Business Morning. Welcome back. This is the last lap of Business Morning for today, Friday. We head to the markets and we go to the equities market to start with. It was not a very good day yesterday. Almost 0.5% is what the market lost at the close of Thursday's trade. But the market is still on a positive side, even though we have investors deciding to sell off. So it's still at 71,450, 7.92 after losing 0.49%. The equities cap is at 39.10 trillion naira, and that's down. Lost 192 billion naira. Profit taking still eating deep into the market. If we look at the activity, we saw it was a sea of red for the activity chart right there. Volume value deals all dropped yesterday, but we're still celebrating that high level of number of deals in the market. We had that yesterday. Top trades yesterday had insurance, various cap, Insure, and various cap as well as Nigerian breweries. They made the top trades yesterday. Let's look at the smaller markets, right? The NESD, we saw that was positive, up 0.55%. Market cap was at 1.18 trillion naira at the close of trade. And also in this market, the activity chart was also in the red. The activity chart there you have it. Only 8 deals yesterday. That's less than the previous day, more than 27% less than what we had on Wednesday. And then the volume, almost 100% right there. Let's go to the fixed income market now, with the fixed federal government bonds. There had 10 deals valued at 6.50 billion naira at the close of trade, with the securities of 21st of June to 2053 carrying most of the activity at the close of trade yesterday, worth 3.50 billion naira. And the list, we had 3 of them. January 2026, June 2038, and March 2036. Let's look at other markets now. The Treasury bill market had quite a number of deals right there, 342 deals. That's a lot, even though it's in the secondary market, and it's worth 484.22 billion naira at the close of Thursday's trade. Now, we have telling us more about the activities in the market, Kenneth Onoha. He is Arm and Balance Sheet Management Officer with UBA, joins us to tell us more. Good morning. Good morning, Kenneth.
Thank you for having me.
Okay, all right, great. So give us a summary of activities in the fixed income market for the week. Let's start from there.
All right, that's fine. So I would start off pretty much that the highlight of the week was the NTB auction that held on the 6th of December. The DMO offered a total of 104.36 billion deals were on offer However, we saw that subscription levels hit over 1.7 trillion actually, and then what was actually sold was about 604. Of course, it was oversold. 604.36 billion were sold out of as against the 104.36 billion that was up on offer. Interestingly, the results showed that the rates on the 91-day and 182-day papers both increased by 100 basis points to close at 9% and 13% respectively, from 8% and 12% at the last auction. While the 364 days actually, the stock rate printed at about 15.75%, which was a drop from the 16.75% at the last auction, representing a 100 basis point decrease. We saw more activities yesterday, pretty much around the new one-year bill that was issued, that was recently issued, because of course participants who lost at the last auction were looking to fill up their orders from the secondary market, which explains the numbers that you see that you had actually posted in your reports whilst you were just before you brought me on. Interestingly, we also noticed that this interest actually waned after the settlement, because of course there were CRR debits that were posted at the cost of during the course of the day yesterday, so that automatically caused the rates to the interest to drop and in the purchases that happened yesterday, and the rate eventually concluded at 13.90 as against the initial stop rate of 15.75%. On the bond side, well, again, there were very quiet sentiments around the bond market yesterday. Of course, typically the results of everybody's attention is actually fixated on the bond auction, the bond auction that is coming up next week. Right, over 360 billion, about 360 billion actually is up on offer against the four maturities of 2029, 2033, 2028, and 2050 respectively.
All right, Kenneth, thank you so much. Thank you. We're just out of time, but thank you so much for giving us a summary. And I know there's a bond coming up. Well, I guess we'll have to deal with that on capital market and next. But thank you so much for your time, Kenneth.
Thank you so much.
Let's just switch over to the crypto space now and find out what's happening there. We have just a couple of minutes, a little bit of pullback on Bitcoin, more than 1%, but still on 43,000. And then Ethereum, however, is on the flip side, gained almost 5%. That's 2,375.27. This is money we're talking about here. But I mean, yesterday we talked about the chief executive officer of JP Morgan, you know, and his statement how if he was in government was going to scrap crypto and all of that. And then yesterday again, we had Senator Elizabeth Warren pushing for update laws to include crypto. I wonder how investors are reacting to that. Rume Ofi joins us now to give us a little bit of a picture of how that looks like. Hi, Rume, good morning. Good morning, Rume. Could you unmute?
Yes.
Okay, yeah. Yeah, so a lot of people are talking about crypto. One day you have a bash, another day you have regulation. Senator Elizabeth now is asking that crypto be included in banking laws. How are investors reacting to this?
Yes, investors and the crypto enthusiasts are actually saying that this is a blackmail. This is not fair to the crypto industry because it's more like throwing the baby away with the bathwater. Crypto has been branded to be somewhat used for illicit transaction, which is not correct. A research done and then data gathered from the UN and the World Economic Forum and also crypto analytic firm Chainalysis suggest that 3.2 trillion in dollar transaction annually is being recorded as illicit transaction, and only 20 billion for crypto. You know, I understand Elizabeth Warren's comment, but it is a blackmail on crypto. That statistic shows that it's 100 times illicit transactions done in crypto. And a couple of us here have always said that crypto, you can't do illicit transaction in crypto. You'll be tracked because it's built to leave evidence. So any bad actors thinking of doing that will be apprehended by the authority. So putting it side by side, using it to compare the banking, making some regulation around it for the banks to absorb it, is as a result of hate from some of these big bankers like JP Morgan's, Bank of America, and the like of others. The way the technology is designed, there can always be a way to scale since it's money over internet protocol. The industry is not liking it. They don't think it's fair and it stifles innovation.
All right, Rume, thank you so much. Rume says it's outright hate. Very harsh there. But I mean, people are free to express. I guess is how the investors perceive it. But thank you so much, Rume, for sharing your thoughts and observation from this.
Thank you very much, Dini. Thank you.
Okay, so we really have to run. Thank you so much for being a part of this Friday edition of Business Morning. Do remember to come back here. 1:30, Will Ibong will be here to give you update from the world of business. 7 p.m. tomorrow. It's Will again. You would have, some of those conversations we couldn't have with Kenneth. You should be able to get it right there tomorrow at Capital Market. I'm Ini John Mekwa. Have a great weekend.